Dear God, today as this session opens, we pray that your presence will be before us and everyone who serves in the decision-making process of our city. We pray for direction which will lead our city to be strong and unified. May we continue the legacy of our founders. May we be granted this day the wisdom to make decisions which will be for the good of our city. We also pray for your special blessing on all those who are working to transform our city and make it a better place to live and work. Amen. And now the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. This is a special meeting of the City Council to review the auditor's performance and in particular discuss the FY 212 audit and management letter. If the clerk would call roll.
Vice Chair Mendonça.
Here.
Councilor Mercia.
Here.
Mayor Murphy. Councilor Nguyen.
Here.
Councilor Elliott. Councilor Kennedy. Councilor Leahy. Councilor Laurie.
Here.
Councilor Martin.
Here.
5 present.
At this point, we did receive the letter some time ago. It was referred to the Finance Subcommittee, and the Finance Subcommittee, at the suggestion of the auditor, thought that this was an appropriate setting and forwarded it to the special meeting. At this point, unless there are any initial questions, I'm going to turn this over to the auditor to give us the highlights.
Thank you. As you can see by the documentation you have before you, it's been an extraordinary year, both financially and as far as the management letter is concerned. We've excelled financially and increased our fund balance greater than it has been in many, many years. As far as the management letter is concerned, as you can see, we're headed in the right direction, and we've actually cracked the biggest nut that took us many years to do, and we resolved the internal control weakness over cash. What I'd like to do right now is turn this over to Richard Sullivan, who is the lead on the audit, and he can review all the finances and the reports themselves, and then we'll open it up to questions.
Thank you. Good evening. What I thought would be a useful approach here is for me to provide you with an overview of what we do, how we do it, and give you some insights as to what my assessment was of how our audit went, as well as some insights as to what I saw in the financial statements. And then at any point in time, if there's a question you want to ask, please do so, and otherwise I'll just continue on. The audit of a city or any city or town is really based on what they call risk assessment. And what that means is we have to get an understanding of what the internal controls are of the city, and based on our understanding of those internal controls, design tests that we think are appropriate for us to opine on the financial statements as a whole. We look at the cash receipt cycle, we look at the disbursement cycle, we look at the payroll cycle, we pay attention to how Cheryl monitors and manages the general ledger, particularly with a focus on what they call journal entries. And we basically design a plan that we think will provide us with the ability to opine on the financial statements for the end of the year. The audit team, which 2 of us just walked in after going through the traffic on 93, was primarily Craig Peacock and Bethany Bernardo. And what we do is we break our audit up into 2 segments. There's a segment that's done in June, which is a 2-week time period. And during that time, what we do is we try to look at things that aren't balance sheet related, meaning date specific. We look at the budget, long-term debt. We look at single audit requirements, of which the city spends over $46 million a year. We look at the internal controls that we talked about and do tested transactions, the purpose of which is to see not only do we understand the design, but is the design and what's happening behind the design actually occurring and basically in the way that you would expect it to do with the internal controls of the city. We then come in after year end. This year was near the end of September. We spent about 3 weeks in the field with our team. Again, the 2 of those being the primary team. We complete our year-end work. We walk down the balance sheet. You have some significant assets that we want to make sure we do what's called substantive testing, which is essentially verifying that the cash balance that's being reported by the treasurer and subsequently reported on the general ledger is in fact correct. We look at receivables, we look at capital assets, we look at your accounts payable to make sure there's been a proper cutoff, we look at accrued salaries, particularly teachers' salaries if applicable, and we try to make an assessment as to whether or not those amounts are reported correctly. To give you an idea of what we're talking about, the city had $667 million worth of assets at the end of June and $419 million worth of liabilities. Cash and investments was almost $93 million. Your capital assets, which is buildings such as this, was $492 million. Your receivables was $62 million. We basically verify every single one of those amounts as to their accuracy, not only of the amounts reported in the ledger, but are they in fact real and can they be substantiated? We look
You said we could ask questions, or is this?
Absolutely.
Council Martin.
So, the assets, does that include things like roads?
It does.
Okay.
It
So it's
does.
not just financial assets?
Well, that's right, because what you have is when we look at the assets, we look at, and it's capitalizable assets, because you have a lot of assets that are below a certain threshold for capitalization, but all your infrastructure, which includes your roads, all your sewer lines and your water lines, includes what we call the vertical buildings, includes major equipment purchases, like the trucks, the backhoes, the police cars. All of those things are, in fact, capitalized, depreciated, and verified as to whether or not they're still useful at the time of each audit.
Okay. I mean, that doesn't seem to me to be of much practical help. You know, if we're short money, we're not going to sell Andover Street.
Nope.
So is there something else that talks about the financial condition, like the financial assets? Or
Then the financial assets, really, if you want to go down that road, I was giving you a highlight of what in fact we
Okay.
do, but I'm more than willing to cut to the chase because I like that type of way to go.
All right, well,
But-
why don't you continue, and if...
I'm almost done with this
Okay.
part, all right? So then there are some assets on the books, liabilities on the books that are real. And that's the OPEB liability, which is significant to the city, and it's real, it's walking and talking, and it's something you have to be focused on. It's the compensated absence accrual at the end of the year, which is all the salaries and wages that would have to be paid upon termination of an employee. Those are things that don't fit into your normal budget process, but appear on the balance sheet when it's all said and done. Now, to get to the part that you're talking about, your general fund, which is the primary fund that you're concerned with working with, you spent $281 million in general fund expenditures in fiscal 2012. Total expenditures, which includes the general fund, all your special revenue funds, your capital projects, et cetera, were $376 million. So there's a lot going on here. And of course, your receipts match that. Now, from a budgetary standpoint, this is the part that maybe you could get an idea. I would consider the city's experience of fiscal 2012 to be an excellent fiscal year performance. To give you an idea, your net budgetary increase was almost $6 million in fiscal 2012. That took your fund balance from a previously reported of 2.2% of your total appropriations to over 3% of your total appropriations. That's unreserved fund balance. That's a ratio that's used by every single rating agency out there to determine the solvency and the reserve policies of a city or a town. Now, realistically, the low end of the level is about 5%, but when you look at what you've done and gone to 3.04%, that doesn't include the stabilization fund transfers that you made in fiscal 12. It doesn't include the ones that you've made also, I'm understanding, in this fiscal year. What you've done, if you can remember anything I've said before, reserves are the most important thing you can have. Having this type of reserves in there is giving you some flexibility with your budget process and also giving you some, I would suggest the next time you maybe go on the street, look for your ratings, there's a real good chance that you could get an uptick on that because of what you've done in fiscal 2012. The last time the city had a fund balance, unreserved fund balance, that was greater than 1% of its total appropriation was in 2008. Before that, it was 0.2, 0.4, and 0.2. So that's a pretty good performance from my perspective.
Councilor Mercier.
Mr. Sullivan, who are you crediting this to?
I be honest with you, I think it starts with the governing body. I mean, you folks approve the budget, you approve the types of expenditures that are going on. I mean, I think you have a team, a financial team that probably provides you with a decent flow of information to make those decisions, but it really comes down to the city council that's running the city. So from my perspective, that's where it starts. The stabilization fund increased $1.7 million. That's another $3.2 million in reserves that you didn't have in the past, which is great. And as I said, first time since 2008 where you've gone over 1% of your total fund balance. Then you look at the enterprise funds, they're holding their own. They're actually being able to generate enough revenues to meet their debt service costs as well as their operating expenses, which is part of the design of the rates. Your OPEB liability, which is the big, I would call it the only blemish that you have to think about that's on your balance sheet, that total liability on the balance sheet right now is $122.8 million. That's the portion that you should have put inside at some investment institution through June of 2012. The total nut that you have is $690 million, based on the actuarial report that was done previously. I would anticipate that the decision of the city to go to GIC and maybe some of the design changes that you've been looking at, that liability could decrease significantly, because that is something we've seen with pretty much every single community that has gone from, let's call it the pure premium-based policies to the GIC, which afforded some economical benefits that lowers the calculation of the total amounts that should be paid to your retirees over a 30-year period. We don't want to talk about the statement of net assets because I understand where you're going with that. Now, from a perspective of understanding how the audit goes, we come in June, we come in September. I think we had drafts issued somewhere near the end of October. There's an assessment period where we go through our quality control. The city auditor and the CFO go through their quality control along with the treasurer. We issued our reports sometime, final reports in January. We actually did something for the DOR before then because they have a requirement they receive the financial statements before that, but the whole package went out sometime in January. I consider that to be a reasonable time frame. The other thing that you should understand is from my perspective is that from a businessman looking at an engagement, you want to know, we want to find out is, are things in order when you arrive? Is there a certain type of standard that we expect from our clients to provide us in terms of an audit package? And I would say that was definitely the case this year. Particularly, and I'll talk about in the management letter, the operations of the treasurer's office and how its operations affect the operations of the city auditor's office were were very much better in fiscal 2012 than they had been in previous fiscal years. And when the city auditor was referring to the fact that a material weakness in internal control that had existed since 2008 is no longer in existence, I think is the measurement point that you can use to say things have gotten better in terms of the operations of what I consider to be a very significant financial operation of the city.
Councilor Martin?
Could you just tell what's improved?
In the past, literally, I would say that there had been no true reconciliations of cash accounts that we consider to be the standard for a treasurer's office. And it actually had deteriorated significantly during that time frame. There had been situations where the vendor account, the payroll account, and even let's call it the depository account had not been reconciled at all during the year. And that's like us taking our checkbook and comparing it to the bank. And then there's another step that occurs in a municipal environment where you take that checkbook that's measured by the treasurer and you compare it to the general ledger. So it's a three-step process. And we were always able to, with the extra work, to determine that the cash was reasonably stated, but we never had a confidence that the controls over it were good enough. So that's why we had the financial statement showing a cash number that we were comfortable enough to opine on. And that's like not being an accountant, that's being an auditor. But we also had the material weakness saying there could be something there that we don't know. And right now I'm telling you that doubt, that potential doubt that we had with those numbers in the past are no longer there.
So we had an issue, we know, with, like, for layman's purposes, like uncashed checks, right? So the checkbook was never balanced, you never accounted for that. That's been solved, right? That's right. And when you say cash accounts, it gets some of us nervous, but you don't mean necessarily currency, right? You mean balancing the checkbook. The ultimate resolution a conclusion we came to was, you're right, the currency was there, but we had to do a lot of audit work to come to that comfort level, because I couldn't just walk in and say, there it is, I see it. To give you an example, not this year, but a few years back,
the city issued $6 million worth of debt. The current treasurer at that time didn't know the debt had been issued. It was because of our audit that we found the $6 million of money had come into the coffers of the city, and it was on the ledger, but it wasn't on the treasurer's books. So that's the kind of thing that I'm referring to, where we were able to, in coordination with the many, let's call it checkpoints, meaning that the general ledger, the outside verifications that we do, the examination of the bank statements we do, we were able to come up with what I thought was a very reasonable and fairly accurate number of what cash was. But that's not the auditor's job. It's the treasurer's job to tell us that this is what the number was, and we were going the opposite direction for several years.
Okay.
So, for the financial statement piece, when you look at everything that's there, you have an unqualified opinion on the financial statements, which is the best you can get. All your reporting deadlines were met, which are reporting deadlines with the DOR and also with the outside financial agencies in the SEC. I can tell you that the coordination of information with everybody my team dealt with was done well, and was a nice sense of professionalism through the whole process. We don't come in and ask the same questions every year, just so you know. There's something called professional skepticism. And what that means is we have curveballs and sliders that we come in with every year that we ask that haven't been asked in the past. And the responses to those questions were easily handled, meaning that there wasn't a lot of fumbling of papers. They were able to respond timely, and the responses were also accurate. And finally, which I think is something that's important, because I know the council receives monthly or periodic reporting of the numbers, where you're at from a budget standpoint. There were no adjustments required. We did not propose any adjustments to the general ledger as a result of the work that we did, which, as an accountant, that means I did a good job if I'm the person responsible for doing that. That's the piece on the financials. There's also the federal awards report, and then I'll quickly do that, then we'll get to the management letter. The federal award report is required under what they call A133 standards, because the city expends more than $500,000 worth of federal grants. Well, in fact, it was $44.5 million in federal grants in fiscal 2012. We tested 55% of those grants. That includes ARA money, CDBG money, Title I money, SPED money, and we go out to all the program level people, because even though the general ledger is the keeper of all the information, we actually go to the programmatic level to see how these folks are doing their work. That's a lot of testing, a lot of compliance testing, hundreds and hundreds of transactions for receipts and disbursements and payroll. And I'm pleased to say that we do not have one finding for any of the programs that we audited for the federal grants. The finding is both in question costs, meaning that we see a cost that should not have been incurred, or a non-compliance manner where reporting wasn't done correctly, eligibility wasn't calculated correctly, things like that. And every single one of the agencies, or say programs that we audited, the folks that were responsible for managing those programs did a very, very good job. So no results, no question costs. Again, we're into negative assurance, but it's an unqualified opinion, which is the best you can get. The last step of our audit, in terms of the 3 documents we put together, is the management letter. I'm very pleased that I'm able to sit in front of you and report that the material weakness that has existed since 2008 is no longer included in your management letter. That doesn't really jump out of there. We basically have only, on page 2, a very short, few paragraphs saying, this is what was done, and this is not considered to be, a material weakness is now considered to be resolved. I can tell you that I'm very cognizant of the fact that a lot of work by a lot of people went into making that thing go away, and I think it's something that it should be acknowledged as part of the audit, because I'm very happy that that did occur. In addition to the elimination of the material weakness, there were 6 other points that are carryovers from the prior year. Yes? I'm sorry.
Councilor Lowell.
Thank you, Mr. Mayor. Vice Chair. You were talking about the city and the condition we're in now, and you've basically described it as excellent. And I don't have an accounting degree, or I was a history major, actually, so I would just pick your brains a little bit for the next couple of months. You talked a little bit about how we got here, being fiscally conservative and really watching the books. And over the next couple of months, we may be bonding money for infrastructure improvements. which you call an asset. It could be kiosks, which would pay for themselves. It could be roads, it could be bridges. At what point would you recommend that we probably start being careful where we end in the end of the bonding? For example, a kiosk would be $2 million, and that would probably be paid back in 4 or 5 years. But as far as roads, bridges, infrastructure investments, what would you think is a good borderline limit that personally as a counselor I should look at in the months ahead?
Right now, your debt service as a percentage of your total budget is a hair over 6%. That's a conservative number. If you get down in the fives, I'd actually be saying you might be not paying attention to infrastructure, meaning that you haven't got a CIP in place that's identifying assets that need to be fixed, improved upon, and normally the process of paying for that is through debt. So at 6%, I think you're on the low end of the range. As you approach 10%, and that's a wide range when you consider the size of the city's appropriation.
Oh,
But
absolutely.
as you approach 10%, then I start looking for kind of factors that might influence whether or not I have concern with that or not, such as if you had debt for the schools, and you know you're receiving a significant reimbursement from the MSBA, which in the city's case was in the 90 percentile for a while there. So if you had a higher percentage of debt to your appropriation, but I know that you had a very stable, guaranteed revenue source, I'm not so concerned anymore. So right now, I would say to you, I would not dip below 6%. For what I call that's called laddering of debt. As debt service goes off, you bring more on, and usually that's coordinated in conjunction with a CIP.
So to preserve our assets, to keep it around 6%.
Yep.
I think we talked about bonding money, and we did talk, and we voted, I think, for the Greater Lowell Regional. And I don't think it's anywhere near 90%. I think it was more 70.
You know what, I must be remembering the school projects that have been going on.
They were back in the 90s. That was
The
about
older ones,
90%.
The older ones, yeah.
And I'm trying to think what the Greater Lowell Regional vote was, but it wasn't near 90%. And I think with the state finances being what they are, we probably won't see that for a while.
Probably.
Okay, no, that was my only question, and I appreciate you being here tonight and the remarks. But while you're here, I just want you, not having an accounting background and not having a background with budgets, to pick your brain a little
That's
bit.
fine.
Thank you.
Thank you.
Please continue.
Okay, I think we were at just at the point that of the 6-point management letter comments that existed at the end of 2011, pretty much all 6 of them have had either been resolved or have had significant improvements. In my notes here, I said 2 have been fully resolved, which is as good as it gets, and every single one of the 4 remaining are almost at the point of having been resolved already as I'm speaking here, or significant progress has been made with a goal of having them resolved by the end of 2013. I think that's a good step in the right direction. Of the current year comments, we basically had a couple that talked about, one talked about the size of the reserve for the allowance for abatements. We wanted to make sure that that was adequate. We thought it might be a little low, so we were saying take a look at that. We also wanted to talk about the tax title process and maybe be a little more expeditious in going after collections there. And the other 2 comments are what we call informational. One is to maintain your unqualified opinion. You have to get an actuarial report for your OPEB every 2 years. That was a recommendation, kind of like don't forget, because OPEB is still new to a lot of us, including us, and we want to make sure that we're not missing our deadlines. And it does take a while for those actuarial reports to be compiled and provided for the audit. And then there's a lot of new GASB standards coming down the road, which some are going to affect the city this year, and some will affect the city in 2014 and in 2015. And I know it's not part of the budget and the process that you work with day to day, but some of these are going to have a dramatic impact on the presentation of the pension liability and the OPEB liability on your financial statements. Briefly, right now, you only have to show what would be called the portion of the payment that you make that year that you did not make as a liability. They're going to have you put the whole liability on the balance sheet. So when I said that $690 million OPEB liability, that's going to appear on the balance sheet right now versus the 122 you have at the time. So to wrap this up, and again, with any questions thereafter, I look at this from a financial perspective, an audit perspective, an internal control perspective. And what I want to share with you is that FY12 had a lot of good milestones accomplished. I think your financial situation improved significantly from the previous year, and I think that's from really some things that were put in place in years past that came to fruition in FY12. I'm really happy with the increase in the reserves as well as the elimination in the management letter. And it's my hope for you folks that this is a good trend. It's going to continue, because if it does, the future of the city will be more stable than if you were just trying, like some of our other communities who have to go day to day or year to year, wondering where the next dollar is going to come to fund the next budget that's coming up. That's it.
Anyone have any questions? Council Martin and Council Kennedy.
Thank you. I agree, and I'm generally in agreement with the conclusions in the management letter. So thanks to the auditor and the other offices that are involved in that, because there is significant improvement here. I'm sorry, I stepped out while you're in the middle of talking about the federal programs. So I know we have a clean opinion on the general fund, but I don't think you give the same type of opinion on this,
It's
right?
a little different, but the gist of it is, it was a clean opinion. There's 3 opinions in there. One is on financial control over the entire reporting ability of the entity. The other is controls over the administration of federal grants. And the other one is whether or not the report that's shown there that shows you're spending the $44.5 million in federal grants, are they accurately reported? Each one of those report was accurate. And the only thing I probably you didn't hear was, which is worthwhile hearing maybe again, is we tested 55% of those $44.9 million in expenditures. Various programs out there, SPED, Title I, CDBG, a number of other ARA grants, and workforce incentive. And we didn't have one finding or question cost as it related to any of the work we did. And that really is hundreds and hundreds of transactions. Not that we're looking for something bad, it's just that we have to do this, and I'm sharing with you that those tests came back with positive results.
Okay. All right, thank you.
Council Kennedy.
Thank you, Mr. Chairman. You mentioned the tax title. Could you expound on that, what your recommendation is and what you think about what we're doing with that?
What it was is we saw that some of the tax title properties out there had an age to them. They were a little long in the teeth. And our thought process is that that's a viable asset. That if some assets can't be turned because of their condition, but if you approach the tax title process with a little bit of a, let's say, aggressiveness or a sense of urgency, there's potential money out there that can be turned in. And essentially, when you do a lien and actually collect on that lien, that's money that falls to the bottom line and to free cash. So the thought process we had was, because of the age of some of these properties, I think the number was between 5 years and 40 years or something like that, assess them, take a look at them, be able to talk about them, and then of the ones that are viable in terms of being able to turn into a liquid asset, go after it.
And do you know what would be the inventory? Do you know what the inventory that we have for that is?
I don't know off the top of my head. I'm sorry.
I was going to say, though, in all actuality, this was on the 12. We did the sale after that point in time. So he hasn't even really audited that piece yet.
Okay.
Fiscal 13. So it's not reflected here.
Okay. Okay, thanks.
You're welcome.
Council Martin.
Yeah, but it is in here as $6.5 million in tax title properties.
Thank you.
That's in page 10 of the letter. And then it's, 2.9 million is more than 5 years old. And that might be lack of diligence, but it might also be that property's contaminated.
And I'm
Right.
very well aware of that.
Right.
Very well aware of that, yep.
So, but this is before the auction. So hopefully these numbers will be significantly reduced in the next year's audit. Okay.
If there's anyone in the audience that has any questions or comments? No, don't see any. Does anyone have questions of our auditor? Maybe not related to the management letter per se? All right, hearing none, I guess that concludes our agenda for this evening for the special meeting. If someone will make a motion to adjourn, Council Lori, seconded by Council Mercier. All those in favor say aye. Any opposed, say nay. Motion's carried. The special meeting is adjourned. Thank you, Mrs. Sullivan, and your colleagues that are here as well.